Hey, good afternoon, everyone. My name is Ashish. I'm a partner with Bain Co. I'm part of the firm's investors practice and lead a lot of our work. Okay. Is now better? So I was saying I'm part of the firm's investors practice and I lead a lot of our work with private equity and growth investors and hence track the investment landscape in India very closely. And over the next 15 minutes or so, I'll share our reflections on the year gone by, on 2025, and how the industry saw investment activity across different elements. So as we look at the last year, right, there are three key headlines that we have. Like number one, if you look at the overall investments in India relative to 2024, we actually saw a decline. And we'll go deeper into each of these messages. One of the key things that you'll realize as we do so is the private equity investments saw a little bit of a decline, but if you look at venture capital and growth investments, they continue to expand. So that's message number one. Number two, if you look at the deal activity, and again, like I'll go into a little bit of detail here again, there's activity that we saw across sectors. So it was a well-distributed investment activity, investment landscape that we saw, multiple sectors, consumer, retail, manufacturing, also on the tech side, you'd see, saw a bunch of investments. And third, from an exit activity perspective, very strong year, remained pretty stable at $35 billion of exits. Public markets were the primary channel for exits, and that's been the case in India over the last 4 or 5 years as we've kind of tracked the market. So that continued to be the case. Now, if we go into deeper, if we go deeper into each of these, right? So overall, at $36 billion in overall investments, that was a 17% odd decline over the last year. The private equity deal value was lower by 33%, but venture capital grew. And the context about the last year is obviously the global uncertainty that the world has seen, and as a consequence of that, people did pull back on the amount of investment they wanted to put in, and then valuation gaps kind of accentuated that issue. But if you look at this, and we've kind of tracked this over the last 10, 12 years, right? We are, and 2025 is the last column that you see here, where we are at about $36 billion. But over the last 10 years, and if you remove the period which is a COVID inflection, 2020 to let's say 2022, the market's kind of corrected post that. But now the levels at which we are settling, right, like 23, 24, 25, in that $35, $45 billion zip code, that's actually much ahead of where we were prior to 2019, right? So over the last 10 odd years, you would see India has actually consistently expanded the investment market and in a pretty healthy space. You'll obviously see, some of these year-over-year variations, but secular long-term growth potential has kind of been realized over the last 10 odd years. Now we specifically look at the last year, right? And there's a few things to keep in mind. What you see here is the overall investments value, and then we've kind of divided that into deal volume and the ticket size. For every deal, what was the typical size of the deal? And what you would see is actually, even though overall investments declined, but both in private equity as well as venture capital and growth side, you would see the total number of deals actually went up, right? So if you look at PE, I think the deal volume was up 25%. In VC and growth as well, the deal volume was up 4-5%. However, the deal size actually declined sharply on both, on actually the private equity side and VC and growth were kind of stable. And this is particularly important because if you look at the context of the global uncertainty that we're kind of living in, AI, multiple things, geopolitics, you would see that investors are actually now focusing on mid-market companies that have domestic focused businesses, lower impact of global things there, policy shocks don't impact those businesses as much, and then enter at a better value, right? So one of the things that you're consistently seeing is while the number of deals will be large, but you actually fight for some of these mid-market companies that have the right value creation potential, and not really the large checks. That's at least the theme of the last year. Now, the second point that I was describing, right, like if you look at, the different sectors, we felt that it was a fairly well-distributed capital deployment across sectors. You look at consumer and retail, it emerged as one of the largest sectors, and then you had industrials and new age tech. And the theme underscoring all of this is, a few kinds. One, the resilient domestic consumption in India actually provides a solid anchor for investments, which then manifests in the form of consumer retail actually getting a lot of traction. There's a lot of tailwinds when it comes to manufacturing in India, right? Both the global supply chain realignment as well as the government focus on the right policies. That I think is actually playing out, and we see manufacturing actually growing when it comes to attracting capital. And then the third big thing here is actually the new age companies of India, right? Where you see consumer tech companies, you see fintech companies, the large guys, and some of the small companies that are now emerging as well. They continue to attract capital. So the three pillars of growth over the last year were these. And look at the stack on the right hand side, right? Like it's as balanced as it has been like over the last many years. You see consumer retail actually, like I was describing, being one of the largest traditional sectors to get capital. There was deployment in food and beverages, in household appliances, in QSR platforms. Industrials, which is referred to as advanced manufacturing here, actually gained a lot of momentum. And IT in the day and age of AI did see some contraction where, if you look at the gray bar in 2024, the second row in the penultimate column, you'd see IT has actually kind of shrunk a little bit, right? But that then was compensated for by a pretty significant growth in consumer, a very good, manufacturing build, and then the pink, rows that you see at the top, right? Consumer technology and fintech, they attracted a lot of capital as well. So, and this is consumer, right? Like it saw a 2.6x increase in overall deal value at about $4.5 billion. And look at the sectors there. There's food and beverages, there's household electronics, there's QSRs, etc. And there's a bunch of text written on the page, but the primary point is the three big things of India consumption: increasing household penetration, continues to play out. Higher frequency of purchase as the country gets affluent continues to play out. And then premiumization continues to play out, right? And that then manifests in different forms in each of these sectors. A really large domestic consumption base, then a playground for, a lot of, good businesses to kind of get built and then get funded, right? Which is what you saw over the last year. This is manufacturing, again, like very interesting at about 4 billion of invested capital over the last year. That was 1.6x of the year prior to that. And it's very interesting to again look at, how you split that into the different sectors, right? Like you saw a lot of push on electric mobility. You saw a lot of push on auto, but also electronics and semicons, right? And that's again like a very interesting point to note here. And in terms of fundamentals, just like consumer, right? Like we spoke about, those 3 or 4 fundamentals that kind of drive activity there. Here, you'd think about, global supply chains that are actually getting diversified. Global OEMs and tier 1 suppliers are actually looking at India to enhance the resilience in their supply chains, and that's kind of benefiting the Indian ecosystem. You would see there are next generation of demand drivers as well, right? Like you see EV adoption actually rising in the country. There's AI and data center linked electronics and semiconductor manufacturing that's actually happening a lot. There are innovations in aerospace that are happening, and there's a lot of companies that are getting built around that. So that is actually then manifesting in the form of the investments that you see here, and this again is supported by multiple government policies, right? Like you look at the production linked incentives that are across the different sectors. You look at Semicon 2025 scheme. You look at FAME. A bunch of that has actually supported the bill that you see here. I wanted to take a minute to also talk about the new age companies. Just to recall, consumer tech and fintech both were, really strong drivers of investments over the last year. This is consumer tech, consistently been really large over the last year. You saw $5.5 billion in the previous year. This year ended at $4.5 billion, but like still above that $4.5 billion mark that we've seen kind of over the last 2 years. You look at on the right hand side how it kind of stacks up. platforms, both the B2C commerce platforms, you would put your Zeptos of the world here. D2C companies, you'd put companies like Snitch, companies like First Club, etc. there. So there's a lot of activity that we saw on that side. Now, and again, like there are two sides of India, right? Like you look at the traditional sectors, consumer, manufacturing, really strong, and then you see all of these new age companies that are actually widening the exposure, widening the demand base that the traditional sectors used to kind of cater to, and then also in the process improving convenience for the consumers, right? So that's continuing to kind of play out in India, and was a very solid year therefore. A similar story played out on fintech. Fintech again, 2x of the last year is where the year ended at. Payments, wealth tech, and lending were really strong, and yeah, I mean, again, like really diversified. Now, the one thing that's happening in fintech is capital is actually getting moved towards companies that have demonstrated profitability, that are scale leaders in their own sectors. Some of the mega rounds pre-IPO, etc. That's what was the theme of the year. And lastly, I'll take a couple more minutes just talking about exits. So exits at $35 billion last year as well. This was, I think, the number was similar. So it kind of remained stable. And you look at the salience of different exit channels. Public markets continued to be the name of the game. This is how we kind of look at this, right? Over the last, and ignore 2021, but like since then, you have seen a consistent increase in exits. And you look at the share of public markets, which is the second row here, that's consistently been really large. This year it was about 40% of all exits were through public market transactions, and that again points to the investor confidence that this kind of then builds, where there are deals that you do, but then obviously there are multiple channels available to kind of generate returns for yourself. So that's kind of played out in a very meaningful manner. A lot of text, but the point that we wanted to make was even exits were actually across sectors. You're seeing a bunch of exits, right? Like you look at energy, you look at healthcare, you look at BFSI. These were deals that would have been done a couple of years ago, and then this is the time when the funds are exiting. The spectrum that you saw on invested capital, a couple of years out, you would see that then translating into exits as well. But this again, like very healthy as you think about different sectors, right? And the moment it's balanced, it's actually like a really good sign because across sectors, then in the future capital can be deployed. That was actually all. Thank you so much. It was an absolute pleasure speaking to you all, and yeah, thank you.